Boy, it's been a long day for you. We appreciate you coming on the show. And just talk to us a little bit about what's driving the growth. We saw, 17% increase in revenue, and your forecasts are where everyone's exuberant.
Sure. We saw a very strong result in Q3, Caroline, and what we're seeing here is strong momentum in our business. We have more users on our platform than ever before, and we're seeing growth acceleration on our on-demand business, which is our mobility and deliveries business. And a lot of this is really driven by all the new product sets that we've been rolling out over the last 3 quarters, and those are really coming into action now. And also our financial services business continues to be our fastest growing segment today. So we're firing on all cylinders, strong demand as we exit the year to one of our most busiest quarter, which is the holiday season that we have here in front of us.
How much are you still having to focus in on the cost-cutting side, the focus on net profit, over and above perhaps expanding the market share as it was before, revenue growth at all costs?
Sure, yeah. So one of the things about Q3, which was a very strong set of results, was also not on the top, but also on the bottom line. So what did we see? We saw high adjusted EBITDA. We posted a highest $90 million quarter adjusted EBITDA, which is the 11th consecutive quarter EBITDA improvement. We also posted net profit for the business and also free cash flow. Now we're balancing both growth and profitability. And what we're doing is making sure also that the top of the funnel, the demand is strong. We're continuing to capture those demand, but at the same time also balancing costs and also making sure that operating leverage as the business continues to grow and continue to sustain. So we're balancing both, and you're seeing that in the third quarter of our results, where you're seeing the growth on the top, but also the profitability on the bottom.
You're balancing investors' desires as well for some returns when it comes to buybacks, for example. JP Morgan analysts saying, look, with these healthy free cash flows, maybe you could raise prospects for an increase in buyback programs. Would you do that, Peter?
We have a buyback program in place today, and it's a $500 million buyback program that we initiated in the first quarter of this year. We're about 40% all the way through there, so we still have some ways to go, and we're continuing to make good momentum in the buyback program. And what I would say is, when you think about our capital allocation framework, is 3 things. One is making sure that we're investing in the organic growth of our business, and we're seeing that coming into play with all the new products that we've been investing in. Organic growth is our highest yield, and we're going to continue to invest. When it comes to more M&A opportunities, inorganic growth, the bar is extremely high for us. Now, when we do have excess liquidity, we do want to return them to our shareholders. And you've seen our first step in doing that earlier this year by this $500 million buyback program.
Okay, JP Morgan analysts might have to hold on a little bit longer for any articulation of a raise in the next one. But what about the areas of growth? You talk about it, whether it's the financial products, but also advertising as well, coming to your platform. That's something we've seen with Uber, which is a big holder of your stock and backer of the company. How are they going? How much will we see that contribute to revenue going forward?
Sure, yeah. Advertising actually is another component of our business, which is growing very fast at the moment. Actually, we're at a clip now where it's doing $200 million from an annualized basis. Now, if you look at the penetration of advertising, we're continuing to grow that as a revenue, as a percentage of our deliveries GMV. We finished the quarter at 1.6%, and we continue to grow that. And we are also up on a year-over-year basis. And one of the things that we're seeing also, it's helping our merchants. We are bringing in more merchants onto our platform also for the advertising services. It's a win-win situation. Also, we bring them traffic back to them. And we see actually the advertising to be still a lot of upside in front of us. So we're going to continue to double down on advertising, as well as also as we continue to also look to expanding our grocery delivery also. That will also bring another layer of advertising business for us.
Overall, it feels as though, as you said, you're firing on all cylinders. The share price up a lot on the day. But I just want to take a longer term perspective here, because if you do put in a 5-year chart of your stock, it is down significantly from previous highs. And many have been trying to understand also just the extent of the growth in the market, particularly when you've got some macro headwinds for Southeast Asian consumers. Can you just tell us about where next for the next 5 years to get perhaps the share price back at those all-time highs?
Sure. If you step back on Southeast Asia, 660 million people, 50% of those population are under the age of 30. It's a smartphone first nations. We operate in 8 countries, 700 cities, which is pretty much the whole of Southeast Asia today. And we still believe that we're still underpenetrated where Grab operates today. So if you look at our mobility business today, you're looking at high single-digit penetration. If you look at our deliveries business in the mid-teens, so there's still a long way to go. And if you look at the financial services side of the house, also 60% of Southeast Asians are underbanked or underserved. So there's a big TAM opportunity for us. And what we're seeing is from a macro perspective and from a demand, it's not slowing down. If anything, actually, it's going through a strong momentum. And one of the components that we're seeing actually is the level of tourism in Southeast Asia. Tourism is a very critical component. It's a very important sector of Southeast Asian economy, and we're seeing continuing increase of tourism into all the different countries in Southeast Asia, especially coming out of the COVID days to where we are today. And we're capturing those markets. We're one of the biggest beneficiary actually of tourism in the ride-hailing as well as in the food delivery side. So, and if you look at from a longer-term perspective, and I'll just cite a third-party report that came out last week that over the next 5 years, the digital economy of Southeast Asia, where the mobility deliveries will be growing at double-digit CAGR growth. So we're very bullish on Southeast Asia, and we're going to continue to double down on Southeast Asia, and we're going to by doing actually more products and services for our customers.